Okay, everybody ready?
Yep.
Sure.
Here we go. And here we are. Folks, thank you for joining us for today's episode of Trade the Chain. It is Friday, June 11th. Happy Friday to everybody. Glad we reached the end of this week. I think, I'm not sure. I think the four people up here are fully detoxed from last weekend's event in Miami. Hopefully so. I don't know. Monty looks like he may have the shake still, but we'll see.
Well, it's Friday, Alex, so let's do it all over again here in Chicago this weekend, and that'll be good.
That's true. It's weekend hair of the dog. Folks, we have Nick Mancini, Trade the Chain's Chief Community Officer, filling in for Ryan, who is currently on an airplane somewhere in the world. And then, of course, the usual suspects, CJ and Monty from MarketRebellion.com. And, you know, the title pretty much says it all on what we're going to go over today. First, we're going to hit the big boards. We're going to, see what the possible outcomes of Bitcoin this weekend are going to be. We're also going to do Ethereum alongside that and if you're a Trade the Chain member and you hit up you were in our AMA earlier today, there's some fear and doubt from our Trade the Chain analyst, Nick, and we're going to see if that coincides with CJ and Monty and what they're seeing. That being said, the follow-on is going to be what are some expectations for the altcoins? We know a lot of you are heavy into the altcoins, as are we, and what we can expect going through this weekend. Tears or a day on the beach? We'll see. CJ, you're pulling double duty because of Ryan's absence.
Yeah, so just a reminder, nothing said today by Market Rebellion or Trade the Chain should be considered financial advice. We do this for educational and informative purposes only, but we would advise you to do your own research and not make decisions solely on the research and education provided in this show. Also, Trade the Chain is brought to you by Trade the Chain, an AI-driven sentiment indicator and dashboard system with actionable alerts to help you beat the market. Now with a community worldwide, traders sharing their victories and defeats throughout their progression as traders and hopefully money makers. 2-week free trial, or no, two-week money back trial on this one, I believe. So go check it out risk-free at tradethechain.com. And then moving over to Market Rebellion /crypto. This is Monty and myself and our community at Market Rebellion. And with us, you get exclusive trade insights on a weekly basis, as well as our macro portfolio allocations, a pro charting platform, and a trading education curriculum that we are continually adding to. We mentioned briefly yesterday that we're going to be doing some Bitcoin options trading. I really want to build that out going into the future, so make sure you stay tuned for that. Going over to the markets real briefly on the Trade the Chain dashboard, you can see that we have dropped off, much more bearish, at least on the hourly sentiment than yesterday. Same thing with daily, and of course, as the long-term sentiment still remains bullish here. Volume very down all across the board. After all, it is Friday going into the weekend, so we will get into that more in depth as we start the show. But gentlemen, anything you'd like to say to us before we begin here?
I think I'm pretty quiet today.
Wow, that's a surprise.
I mean, I knew Monty was going to come back.
We got to be able to take something away from that. Maybe the market's, calm. Alex is quiet.
I've got a small comment. We talked about this in the AMA, and it just kind of reflects back on just being able to utilize TTC a lot, and just having founded a sentiment company previously and been in the game. It's just there's a few insights that I have that it may not be obvious to others. So when CJ was talking about, hourly sentiment is looking bearish, it's dipping down to neutral. Now, the way that I play sentiment is very much similar to price action. If sentiment is bullish and it's, kind of curving at the top and obviously it's reaching a peak, I don't want to trade peaks. You want to trade troughs? I guess you can trade a peak if you're going short, but for spot traders, keeping things simple, you want to sell up high and you want to buy down low. So if sentiment is bearish, or is slightly dipping under or is tipping neutral from a bullish previous position, that means that it could be bouncing on sentiment support, meaning that if it's hitting neutral after being previously bullish, it's in a decision-making zone, meaning that it could go up, it could go down. That is a great level to actually look for coin and look for coin entry opportunities, because you want to buy when things are low, not when they're already rising or high. So neutral bearish can present some great opportunities, especially on the hourly or daily timeframes.
I have a question for you as well, Nick. Do you find that sentiment is a bit of a lagging indicator for, which is still useful, right? You can use it for confirmation and things of that sort, or do you find it to be more of a predictive indicator? Because both can be very, very useful.
So that's a really good question, and I don't think our audience is going to 100% like the answer, but it does depend. I will say for larger caps, it is usually a leading indicator. You can see where certain spikes are occurring, and then you'll see 15, 30 minutes after, you'll see more volume or more trading activity come in after that. So typically, if I'm looking at, let's say top 10, top 25, I treat it as a leading indicator. But occasionally it can be a lagging indicator as well, especially for small caps in which, price or sentiment is more or less reacting to price because something happened and then everyone's tweeting about it. Whereas in Bitcoin, everyone's trying to get their predictions out. Same with Ethereum, and everyone's talking it up into what direction it's going. And that way it's a leading indicator. So if it's out of the top 25, I'm probably, not jumping in on a spike, but I still think that they're completely valuable.
Thank you. That makes sense. All right. Well, let's hit the big boards then.
Let's do it. CJ, do you mind if I actually quickly go
Whoa,
first?
Monty gonna lead?
take
You're
over.
leading, Monty?
Well, I just want to do a quick follow-up from what we were saying on Wednesday when the four of us were last talking. And I'm going to go, CJ does a great job of looking at the macro perspective. I just want to quickly look at a more micro perspective coming into this weekend because, I think that based on what we've seen technically, I think we have a pretty good range we're setting up here that can give us an idea of where we might, finish price this weekend and some levels we may retest. So on Wednesday, I was talking about this inverse head and shoulders formation on the 1 hour chart. It's still looking, pretty valid. And I think that what we're seeing here is a nice range being established on this, along this hypotenuse of this triangle here, as well as this critical level established by the sequential indicator. So this is 37.5K. And then this level here is about 36K. So I think as long as we can remain in this range and not break below this line right here, I still believe in this, sort of inverse head and shoulders bullish formation. I think that if we do, remain in this range, there's a good chance that we break through 37K and possibly retest 39K, which would be a great sign coming out of the weekend. But one thing that, a lot of you guys have pointed out, CJ pointed it out when we looked at the coin screener page, is just the lackluster volume heading into this weekend. It's Friday, but even still, the volume today is just not sufficient for a breakout in either direction. So really, I think it's most likely that this weekend we're going to be somewhat range bound, and that's likely going to be between these critical levels of roughly 37.5K and, this hypotenuse or this level of roughly 35.5. So I'll be watching this range closely. And, a breakout above this level, I think, would be a very bullish indicator that we may be headed up to retest 39K. But that's what I got in terms of the micro perspective. I'm still watching this formation playing out. So I'll pass it back to you, CJ.
Thank you for that micro perspective.
Mm-hmm.
I don't have a whole lot to say about Bitcoin. I'll be honest. We haven't really done anything. Same with what Monty said earlier. Not only have we had very little volume, but we've had a complete lack of volatility. And you could see that expressed by the compression of these bands. So how do I play this? How do we kind of highlight critical levels?
CJ, I have a question, and this is just, I don't trade normally using Bollinger Bands, but I used to experiment back in the 2017, 2018 era. The rule of thumb is generally when you see compression like that, a big move is coming, right? Or that's generally a signal that there's a large kind of candle is on the horizon somewhere whenever you see that kind of compression, or am I misreading that?
No, when implied vol decreases, it depends on the asset, but in certain instances, we will see kind of a move after that lack of volatility. So
Yeah.
thank you for bringing that up as well. That's another good point. So I mean, yeah, we're just in this neutral channel right here, and there isn't a whole lot to say until we break either the upper or bottom band. Because if we would, obviously we'd be creating kind of a lower low here, would be pretty indicative of that bearish flag pull down to potentially 26K. I know a lot of bears who have highlighted that, but I also see there's a lot of merit as well for the bullish case, like that compression you mentioned, Nick. If we do get kind of a nice break above that top band and it can really truly start ascending and starting possibly a new trend, then I look to get into that one very early as well. However, the overall most important level, in my opinion, and I think is very, very influential. I think funds are really looking at this level generally as well, is the 200 period moving average or 200-day moving average at about 42K. That's going to be very strong resistance. We saw it reject and experience a role reversal from support to resistance once we fell below it. So it will likely act as resistance on the way back up and may take a couple more kind of attempts at breaking it before it goes out. Still have the CCI increasing, not showing any weakness so far. Last thing I do want to check out is the DMI, because I'm just curious. I haven't looked at it in a while. So remember, I don't know if you guys remember this, but remember how I kept saying I want to see a peak in this ADX to provide confirmation of the end of the bear trend, or at least a very strong weakening of the bear trend. We're kind of starting to see that. And we're also starting to see it reflected in the turning down of bearish momentum and the increase of kind of neutral to bullish momentum. So essentially you can draw this midpoint and you can locate, when is the trend truly changing? And in our past bear trend, we really flipped from bearish to bullish right here. When we had that teal bearish momentum really take charge of the trend, and ever since it's never looked back. However, we could have something kind of like the inverse if we get some more bullish price action that would further reinforce, the concept of Nick, the bottom is in Mancini. I just keep thinking about that. It's funny.
Hey, that's why I did it. Apparently it had the right kind of effect. So
So yeah, all of this, it's not telling us a direct signal to say, okay, enter, buy, or sell right now, but these are things that we can watch for going into the weekends. Personally, I'm kind of sitting on the sidelines until we get either a critical break in one direction or another. And I think it's likely we'll see that this weekend. I got my alarm set for like 4 a.m. Sunday, so I'll look at price. If anything interesting happens, might make a decision and then just go back to bed. So
one of the things that really played to me was the fact that now here we zoom out to the 7-day on sentiment price with Bitcoin, but when we were in the 31K zone, that got me a little shooken up, right? Because we know that support going down is going to become at a higher velocity there. I felt like we were on fragile territory, CJ, and correct me if I'm wrong. I mean, as we do on trading, just putting together the different tool sets together. But you could see that much like CJ and Monty's chart going back 7 days, it's very sideways. Now, when I zoom into the 1 day and I look at the trend, we've already hit that 31K range about 24 hours ago. I do feel that sentiment is fading, and I do feel like price support is going to collapse with it. Not collapse in the sense of, going down to that 25 level, but I just don't think that we're going to hold at the level we are now. So I'm looking forward to that Sunday as well. I think that's going to be an important time, but I don't think looking to the upside for price action is where we're going to end up. Not this weekend.
So I have a quick question for CJ, just because I see this pop up a lot and I haven't gotten like a really good answer. So I typically use like the 150-day moving averages. And I see 200 seems to be a very hot one, both in the media. It seems like, a lot of funds are using it. You guys are using it. So what is the significance of 200, the 200-day moving average as opposed to 100 or 50? Or is it really just personal preference?
I'm just going to interject real quick, Nick, because the 200 average is actually is what constitutes in any sort of data set a mean of window for a proper historical projection of the future.
Okay, so it's just a widely accepted, just great predictor, or I guess measurement for just any kind of time period.
Yeah, thank you, Alex. You pretty much answered that question very well. Potentially better than I could in my own words. But yeah, the 200, and this goes for technical analysis in general, is like you want to pick something that's very, very obvious, because it means more people are going to look at it, which means generally it's going to become a self-fulfilling prophecy and be more reactive. So even if you don't care about TA, market participants, many of them do, and they're going to react to certain price levels differently. And so, that's what I got to say about that.
Makes sense. And maybe I'll have to add it to my repertoire. But I think I want to make a point on the heels of what Alex said, and I think CJ and Monty made some good points. Maybe to slightly contradict Alex over there, but I see that I'm not going to completely say that we're going to break support until I see what sentiment does when it bounces off that neutral territory. I think if you Alex, if you could pull up that sentiment chart real quick, I think this is just a really great example to what I alluded to in the beginning of the session, is when it's already bullish. And if you want to go to 7-day data, there we go. So when it's already bullish and it's coming back down, you can see it's about to kind of tip onto the quote unquote neutral territory in terms of sentiment. Price action is relatively steady, potentially holding on to a mini kind of local support area, and sentiment is just about to get down to that neutral area. So as a person who tracks sentiment very heavily, trades off of sentiment, I want to see that green line bounce off of basically that middle neutral line, and I want to see price go with it. And that's how I would make my decision, is maybe not Sunday yet, but if I'm looking for a scalp trade or I'm looking to capitalize on potential BTC kind of mini volatility, that's what I'm looking for maybe an hourly trade going into the evening.
All right.
That was very, very insightful. I'm glad you're bringing like a very in-depth perspective on the sentiment data.
Oh, I'm making videos too. They're coming soon. So if you're watching this, there will be more on these topics, but yeah, this is how I love to use sentiment.
Give us a +1 in the live chat or the comments if you enjoy this and are learning from Nick right now, because I'd love to see what you guys think.
First of all, let me tell you a quick story about Nick. Okay, I met this guy 2 years ago or more now, in Philadelphia at a conference that I was speaking at, which he was speaking at. And when we were deciding on a chief community officer for Trade the Chain, I just thought of this guy from 2 years ago, and boom, went down to Philadelphia, scooped him up, and was like, "You're on the team." Well, he accepted.
What's even funnier is the way that we met is that we're both Italian, and him and my dad get along very well as just Italian men. And he was literally drinking at the bar like 5 rows down. And we're like, "Hey, you want to come to dinner?" And like 3 hours later, a couple bottles of wine, we're laughing, telling jokes about crypto. So it was a great way to meet. So, and that's why you go to conferences. Literally, it's just stuff like that. So.
Well, if you check out the chat right now, I'm seeing a lot of +1s. So kudos to
you. Videos coming soon.
I thought I had a thought in my head before all that, but never mind. One of the things, actually, let me, I just, because I follow the thing, Dan in the chats, he was like, Alex was right about going into the summer. And it wasn't just me. I mean, it was all of our consensus based on different stuff. And that's why I said, in a couple of days, like beginning of next week, I was going to give revisions on predictions I had given about a month and a half ago. If I had revisions, it depends on what the market does, because how I personally feel is if we remain range bound or lower than we are now going any further into June, we're going to see that sideways action continue into August and not feel a second leg up on the bull market through the end of the year until that September, that beginning of September time, almost exactly like we did last year. If the market changes, and it only has a couple of days to do it before my personal opinion, and it starts rebounding and there's strength in volumes, as CJ and Monty point out, and the price action follows that, then I'm going to hold off on that end of summer. But right now, I feel like it's looking end of summer. How do you gents feel about that? What's your take?
Yeah, Alex, I'm definitely inclined to agree with you, especially after, some of the things that we touched on. I think you made a great point talking about the declining sentiment on, sort of this daily time frame. And then you take that in conjunction with what CJ was talking about and, the critical levels of resistance to the upside. For me, it just seems like it's going to take, some sufficient volume and maybe even a significant news related article in order to drive price to the upside. I mean, we've had both positive and negative news this week, and volume is still just not moving right now. So for me, it does feel like we're a bit of a ways off. If a move is going to happen at all this weekend, it does seem like, just based on what we're seeing in this declining sentiment and the strong resistance to the upside, it's more likely to me that a move would be, a bit to the downside. So yeah, I'm still looking at, potentially a end of July rally, something like that. But in the meantime, I still do think there's a lot of opportunities. CJ and I were talking earlier today about a potential, second DeFi summer here coming up. ETH gas fees are going down, but, ETH doesn't look that strong right now either. So I'm looking out, maybe about a 2-month time horizon for that rally to start.
And just a quick note on that, Monty, I even though you're a month earlier than me on what I'm thinking, I do, as we saw last year, DeFi and the rest of the spot market were different, right? You had the DeFi summer, and then you actually had it come back down to earth going into the fall. But yeah, the two can make moves separately, as we've seen historically. CJ, what are your thoughts? I know we spoke about this last week and the week before, but I feel like we just got to do it every week to keep everybody in the know.
My thoughts on DeFi summer?
No, on our second leg up, if we're going to be range bound for the summer, or if we're going to gain some momentum before the month of June is out.
Yeah, I think Bitcoin's going to be range bound for quite a while, probably until the end of August. But I mean, that could literally change tomorrow if we go to like 45K. You know what I mean? So it's all. Don't come back 2 weeks and say, CJ, you said it was going to take until August and it happened in a couple of days. So like, it's all very relative. But I do think at our current point, due to the lack of price action and kind of stagnation, that, yeah, we probably will be range bound anywhere between 45 to 35 till August. And then the real question is, will the meme coin crowd, or will the existing crypto crowd go into other assets, like sushi, like comp, like maker, like a lot of the DeFi assets that we saw go up very drastically last summer, because Bitcoin was rather stagnant there as well. So I think if we see that speculation, it's a really good sign and possibly a leading indicator for that second leg up, because it shows people they're still speculating. They're still willing to put up money. The end of a bull market is when people have been hurt so bad they don't have any more money left and they want to give up. But I don't think that's what we're going to see in the summertime.
I think, well, first of all, I've always said that if we see a major correction downturn in the equities market, that's going to dispel any prediction or notion that we have about the bull run. For me, that's out the window. If we see a huge dip in the equity market, this is all gone. But to add some positive to that, if we see any more countries start adopting Bitcoin as a currency, then everything about range bound to August could also end. I mean, listen, if half of South America or Central America adopts Bitcoin going into July, who knows what can happen? one of my favorite things I saw on Twitter, and I retweeted this, I believe, was to your point, CJ. I've been buying the dip all month. The dips all month. I'm so tired of the dips. I sell the dips to buy more dips. I'm completely dipped out. And I think that's how we all feel.
I wanted to bring something back just in the macro investing. You have to put your macro investor hat on, especially if we're talking about Bitcoin coming back into the narrative. If ETH is weak, then Bitcoin will be strong. I don't care what other altcoin in the market is going to pick up the market share. Nothing is going to legitimately attack Bitcoin's dominance on the market other than Ethereum right now. So I'm not worried about any other alt if it does have better price action than Ethereum, but I'm looking at Bitcoin. I'm looking at other commodities, I'm looking at bond prices, and I'm looking at equities action. It's quite clear that growth equities is about to get turned back on, which means tech will likely be back into a sexy narrative in the media again. You've got the 10 and 30-year yield are finally faltering after a meteoric rise during the past few quarters. And you've got gold and gold-related ETFs and mining stocks and funds finally picking back up after a weeks or months long bull flag since 2020. So I'm seeing that, and I'm seeing Bitcoin is basically in the same trade as gold. It's actually probably a bit more of an attractive trade than gold because you can get in and get out quicker. It's a little bit more volatile. 10 and 30 are dropping. Ethereum is not going to be back in play. El Salvador just adopted Bitcoin. I truly think that Bitcoin is going to be in vogue until DeFi summer happens. And I think you're going to see Bitcoin dominance rise. I think you're going to see the equities market in terms of hot growth stocks heat back up again. And I think you're going to see the meme stocks still be in craze, and altcoins will not get that money until meme stocks become no longer in vogue. So Bitcoin, I think, is going to turn up the heaters sooner rather than later. Loving the weekly candles right now. So I'm a bit contradicted than my colleagues, but I'm still not balls to the wall yet. So I definitely bought the dip. I've got a small long right now for Bitcoin, but I'm still cautious. I will say that.
Well, let's hop. Go
ahead, Alex.
No, I was gonna. I want to hop into Ethereum because that's where the controversy's at. But CJ, finish up here.
This has to do with Ethereum because it's kind of on the back of Nick's points. And I wanted to look and compare it both Bitcoin dominance. So just a little TA on Bitcoin dominance.
That's good. That's a good formation.
Yeah, right. This is a very nice potential bottom, buy 9, little bit of a higher low, declining bearish volume, starting to see some bullish crossover action. And then when you look at Ethereum dominance, it's pretty much the inverse. It's crazy. We have the sell 9, we have a wide deviation from the moving average, and we have buy pressure really being alleviated. So wouldn't be surprised if we continue to see kind of Bitcoin dominance increase, whereas ETH kind of patterns out a little bit. But I'm interested to hear more about Nick's perspective because I think he's bearish ETH, if I'm not correct.
He is.
I'm bearish ETH until 1800. I'm bullish Bitcoin until 6 figures. Unfortunately, week over week sentiment it's been an absolute dearth of just interest, trading volume, tweet volume, everything related to Ethereum. And it's almost exactly timed with the ETH 2.0 delay news. So, I mean, you basically got, if you talk about all the hits that just happened on Bitcoin the past 3 weeks, put those on Ethereum because Bitcoin obviously runs the market, and then tack on, oh my God, basically now the institutional market was getting ready to buy into Ethereum. And now we've got a multi-month delay on the finalization of the one thing that was supposed to make ETH basically globe world ready. You know what I'm saying? Beyond just us spending $1,000 to run a transaction. So the fact that the market is already looking a year or two out, things just got pushed back 6 months. So whatever time horizon, whatever, bullish outlook you had on ETH, push it back 4 to 6 months right now. And that, to me, that's just, there's no math behind that. It is just how the market operates in the current day and age with emerging asset class investing. They are looking 24 months out. 24 months out from right now means a big giant question mark on ETH, which means price action will reflect the same.
Monty, if you could hit the ETH TA for us, and I would love for CJ to follow it up by lock-in chart to see where we're looking on that as well.
Yeah. No, I was really interested by Nick's perspective there. I too, I'm a bit bearish on ETH right now. I think the news regarding ETH 2.0 shipping being delayed once again was definitely a drawback. But, for me, I think Bitcoin dominance is going to continue to climb. And I agree that ETH will continue to fall to a greater extent than what we're going to see with Bitcoin. And, that difference for me can be defined in just looking at this chart right here with the 200-day moving average and comparing that with what we were seeing on the Bitcoin chart. They're just, in completely opposite territory right now. Bitcoin is above or is below its moving average, acting as resistance. ETH is still above it and it's acting as support. That support coincides with this buy 9 that set up this critical level of 1730, right around that level Nick was talking about at around 1800. We've had a decline in volume pretty much steadily across the board since we peaked here at 4,300. And I think that, volume is looking like it's going to continue to decline. There's just really no good reason right now to be buying ETH. I think what we're going to see is, based on what CJ was just putting out the Bitcoin dominance chart, is, people in this range right here between 2,300 and 1,800, we'll see people taking their money out of ETH, moving into Bitcoin. I do agree with Nick in the sense that Bitcoin will sort of be, in vogue in this summer because it's, people tend to look at the risk off assets when the market's kind of bleeding out. And Bitcoin, even though it is still a very volatile asset amongst the crypto world, it is, most often the least volatile. So I do agree with Nick. I think ETH is looking poised for a retest of this critical level down here at around 1,800. And I think once we do get that, I think that will be an interim bottom for ETH. And I expect the run up for ETH in the second leg to be, timed exactly with Bitcoin. I think right when Bitcoin starts to run up, we'll see that run up in ETH as well. But in the meantime, I do expect it to head back down to that 1,800 level.
All right. Well, one of the reasons why I want CJ to pull up the lockup chart for us is because, with ETH, and Nick and I were talking about this earlier, with Ethereum selling off a little bit and that price appreciation, where's that money going to flow? And is that money going to flow into altcoins? Is it going to flow into DeFi? I mean, I think it's going to get spread through the Altiverse, both in DeFi and non-DeFi, and I'm hoping for that. But let's take a look at the lockup here. What's the DeFi Pulse saying, CJ?
Well, this is usually attributed to not only just a lack of maybe people not locking up, but it also accounts for depreciation of DeFi assets and Ethereum, I believe. So there's not a whole lot I can take from this chart. It's pretty much reflecting the fact that the market is sold off. But in terms of like DeFi, I still see interest. We were just talking about the DeFi summer and how price tends to do pretty well if Bitcoin is at least neutral, but maybe some of the other smart gentlemen on the panel can enlighten me to as their interpretation.
So I have a theory, and I want you guys to tell me if this makes sense or not. So if Ethereum drops, then basically gas fees become cheaper. If gas fees and if Ethereum drops and gas fees become cheaper, then probably people are maybe selling their ERC20 assets, or maybe thinking they can get Aave or Maker or something maybe a little lower, maybe pulling some money out, just protecting value. So if everything's kind of like easing on the Ethereum network, then I think money goes to other L1s, meaning that people are like, okay, Solana's cheap, Polkadot's cheap. Now that we've got the chance, let's try it out. Nothing crazy is going to happen on ETH while it's dropping $600. Let's see what else is happening. But eventually, everyone's thinking the same thing. Let's go to ETH. Let's innovate on ETH. ETH is cheap. ETH has the most developers and the most activity and stuff like that. There's obviously still all the applications are not going to go away. So eventually, while Bitcoin is in vogue, Ethereum starts to creep up in terms of transactions and gas fees. And then Ethereum becomes hot again, regardless of ETH 2.0 news, strictly because everyone else is using other things and real actions happening in the underbelly. And eventually fees get so high that we start talking about it again. And then the narrative is just back on ETH. So I have this idea that Bitcoin is just going to be in vogue. Ethereum used a little, and then it's eventually a slow creep until we hit critical mass. And then everyone's talking about ETH again. And that's basically my thoughts for the next kind of 6 months in the market.
And I think that's a realistic thought pattern. I do want to say one thing. In the comments, Matthew Dorsey commented, you guys forget the market makers control the price, not your theories. That is all going down. That's actually not true. So I deal with market makers every day on the institutional side of crypto, and they don't control the price. They support an order book, but they support it. The market will control the order book, not them. It doesn't matter how much they put in, take out. Their job is to create stability in the order book in the least volatile function. They actually get lent the coins 99% of the time by the issuers in order to support that market. They do not make the upside of that coin. They actually make all their money in transaction fees on the spreads. It doesn't matter if that price action goes up or down. They're making more money than you every day of the week. Think of it as the house, as the casino, and they don't care where the price is. It's all about how much you trade.
Alex, can I thank you for doing that? Can I also ask you a question? Because I think it seems to be a little bit of confusion around market makers and various liquidity providers. But, what's the difference between a market maker and just a liquidity provider?
Sure. Yeah, I mean, when you go into a new issuance and you provide liquidity and like a liquidity pool, and you'll see that you got to split the pair up between, let's say, a stable coin and a regular coin. I won't go altcoin to altcoin where you have losses built in. But when you go stable coin to house coin, you're playing both the maker and the taker, meaning that you're not going to get a favorable side. If you went in all as let's take zero, for example. If you went into their pool and you just put in zero, that's not fair to the rest of participants, because all you're doing is taking liquidity out, right? And you get to keep all your zero. So you got to play both sides, a maker and taker. Make liquidity, take liquidity. It is the beginning formation of market making. So it's our way, the regular people's way, to participate in market making. Now, when you go to the next level to a professional market making firm, let's call it Jump or Cumberland or any of those guys on Wall Street, that market making gets taken to a heightened level. And like I said before, they're there to provide stability in the order book, whether the market price goes against the issuance or for the issuance. And they don't really care, because they are making more out of those trading fees than anything else. It's a casino, and it's a game well played. But everyday investors get to play in it by going into liquidity pools. So thanks, CJ, for bringing that up.
Yeah, speaking of liquidity pools, guys, CJ and I were talking off camera this morning about some of the lending and borrowing yields that we're seeing, across the board right now. Do you guys think that if we do see Bitcoin remain range bound this summer, that people will start to, look to become liquidity providers to start yield farming and earning some of that APY that is so appealing during a bear market?
That is such a great point. I didn't even think about. But yeah, I mean, it's just as if you wanted to sell option premium in a sideways market. People need to find a way to be able to make money when the market's not doing anything. And one of those viable options is being an LP for something like zero.
100% correct. So what every person wants to do is they're constantly on the professional level searching for yield, not unlike the retail folks, So you're constantly searching for yield. Even in sideways market, there's way to make money. So Monty, to your point, yes, but it is a dangerous game if you don't know how to play it, just like options trading. So think of it this way. You're going in and you're playing both sides of a coin. You have a stable coin, you have the house coin, you're in a liquidity pool. You're not getting exposure on the stable coin you have staked. Okay, so you're losing that, but you're also hedging against downside exposure if the coin goes down. Your job is to constantly be monitoring where that price action is going. And if you think it's going to be sideways action for a long period of time, you're going to stay in that liquidity pool to accumulate as much as you can. But if you feel that there's going to be a bull run price action movement to it, then you want to get out of that stable coin and go all in, get out of the liquidity pool and take your upside exposure. So I think the search for yield is going to become very interesting this year, and people are going to start pulling it out of all the dark corners and nooks and crannies.
No, it's quite crazy. I think on the one topic that you guys mentioned, it's the same thing with video games and why like Activision and Blizzard did stupid numbers this year during the pandemic. Is if everyone's stuck at home doing the same thing, and I'm not saying we're going to be stuck at home this summer, but I guarantee you there's a lot of new market participants that have never used DeFi and had some great success last year that may be looking to do it again and telling their friends. I was just on the golf course the other day with two dudes who are opera singers, and they are balls deep in crypto. I mean, they are in it, and they sing at the opera in Colorado. So I mean, like it's crazy where this market is. So I think, and the more narrative on CNBC and Fox Business about all these companies chasing yield and what does inflation mean in the context of my purchasing power. We're in an education catalyst stage that we've never been in before, where every single person with 1 cent to $1 million has access to the same education and the same information. So, this is why I'm still bullish crypto, although, I can sit and suffer for a month or two more. So
I will add one last point from the chats. Porfi, I can't pronounce the name. I'm sorry, man. I apologize. You come up with a nickname for yourself, throw it in the chat so I can call it to you from now on. But Porf came up about impermanent loss. Impermanent loss is the largest risk exposure you're going to have in your liquidity pools, and that is when you take both sides of an altcoin. Okay, when one side isn't a stable coin, and impermanent loss is a loss of price depreciation on both coins. Definitely Google it, look it up. You want to be careful when you play in a liquidity pools pairing up two altcoins at the same time. Impermanent loss is real, but it'll snag you in because you'll see the highest APYs. So when they have 400 million APY a week and you're like, I'm going to get rich, I'm going to buy a yacht. And then at the end of your yield farming days, you realize that impermanent loss has sucked everything up and you're coming out at a loss. So that's it. Where do we go from here?
This is like college today. I think people just got Ivy League educations in about half an hour today.
Yeah, Alex, you were on fire today. That market maker's little speech, man, that was good.
For those who don't know, Alex legitimately taught people on Wall Street. I think on Wall Street how to do this stuff too. So I think he knows what he's talking about.
I don't liquidity farm. Just I'll let everybody in full disclosure know that I very rarely hop into those pools. I like to play around elsewhere. What about you, Monty? You and Nick, do you guys hop into LPs?
Yeah. I like to check out some LPs. I do hold some Zero. I was an LP in that for a while. But yeah, I've been checking out some various opportunities. I do think it's great to do during either a bear market or a consolidating market. The timing right now, I feel like if you hadn't already entered one, you might wait to do it because a lot of people do feel that second leg up is coming and you don't want to have your funds locked up during that. But, still definitely worth checking out because there are some tremendous opportunities.
Yeah, as much as I like to trade with risk, like I love to go on, I love to trade derivatives anywhere from 10 to 25x. So I enjoy risk there, but that's because I generally know exactly what's happening. I can set stop losses and get out quickly and things like that. But when it comes to liquidity providing and yield farming, there's a lot that goes into it. There's a lot of attention that you need to have, especially if you are into volatile tokens. So I'll say what I normally do if I am providing liquidity, which I'm not currently because of market conditions. But I generally hop into a USDC or USDT based pair. So that way I have some stability on one end. And I know that even if I yank it out, then I can immediately put that money into use very quickly, whether in the spot market or on a decentralized exchange as well. So that's what I like to do. I miss out on some APR, but the ones that I like to find are still doing, the quadruple, quintuple the numbers that you're going to get anywhere else. So I'm comfortable with that. But currently I'm out because I'll probably wait to see what Ethereum does around that $1,700-$1,800 level, and then probably look for some pools to get back in. So very
cool. All right. Well, today's episode was powered by volcanoes. If you listen to all the memes on Twitter, people can come up with some crazy stuff. If you don't know what I'm talking about, then either you've been sleeping for the last 2 days or I don't know. But apparently El Salvador is going to be powering. They're powering it off the energy of a volcano or something?
Well, the cool thing about Bitcoin is you can use excess energy to mine, which is another kind of, knock on the Bitcoin is bad for the environment people. So they're basically using the steam energy because to mine it, you have a bunch of water vapor that shoots out. So they're going to use that heat to mine Bitcoin.
Yeah, so a volcano will be used to power that. And I mean, just the crazy, what Nick said, I was in Switzerland last year talking to a bunch of dudes that literally were in a country I couldn't pronounce using excess nuclear energy from one of the state's power plants. So if you can grab that free energy, go for it. Other than that, folks, happy Friday. Thanks for joining us today. I hope you enjoyed us. Hit the like on your way out if you like us. Don't forget to visit marketrebellion.com, crypto, tradethechain.com, because if you think you learn from watching us, you got to go into the communities. You got to see what you'll learn a ton. It's all about education. Other than that, we love you all, and hang on to your handlebars and have a great weekend. If something happens, CJ will call me. We'll hop